a circular newsletter.
Cool.
And we'll talk about how it's new. And then,
we're live.
Hey. All right.
What's up, Joe?
Just just so much going on right now. I mean, to me, when I go across the board, and I thought of something else. I was looking at all the Mt. Gox stuff yesterday, today, and
you're sideways, upside down.
Yeah, I just realized that. Hold on, I'm coming back.
Come back.
Here we go. No, it was something on the phone just keeps popping up again. But what did I no, I was just looking at another link here that I'm pulling up to send to you. But what was I trying to tie to?
I don't know.
No. So, but my point is, no, I'm just like, you said something that I connected it to something else. But the thing is that, I see all this building again going on in the edges of what's happening and all these advancements. I see just continuous talk down about meltdown, but I just don't feel like it's that bad, because when I look at the stuff from Goldman Sachs today and I look at, these year-to-date performances and some interesting stuff in crypto, it just seems like we're kind of in the doldrums and waiting. Now, I do feel a lot like it's getting ready to tip over. In the sense that the fast one that we talked about, right? I mean, it just seems like it's the catalyst for it, because when you look at now I got it. I saw the Mt. Gox stuff. We look at the Mt. Gox stuff coming out on the 16th, right in the middle or just after the merge, and right before FOMC data and right after CPI. It's going to be really interesting. And then all the Chinese dates are in October. As far as the Xi third term ascension maneuver. So there's so much interesting stuff coming up this month. And of course, September is the worst month of crypto. We all know that already. So go in expecting to get your hat handed to you and get ready for October. But, this is just kind of where I see it right now. But again, tremendous institutional uptake across, governments, big financial institutions. I see all of that paired with all this innovation that we keep discovering on the edge. So it's exciting times.
Yeah, absolutely. Absolutely. All right, I'm loading up a few things here because I'm actually pretty fucking fired up this morning, Joe.
Yeah, what's going on?
Well, I got 2 episodes out this week of Mission DeFi. So the first one was Paladin, and Paladin I've had on the show before. They had the ability to, they launched their project, first of all, to their goal is to solve the problem of liquidity for projects, right? Mm-hmm. Which we've discussed before, how painful that is. Project founders, the ones I talk to, are finding that they spend a huge amount of time managing liquidity and bribes across the board instead of focusing on building their products, right? And it's critical. They have to. If you don't have liquidity, you don't stay in the game. You become nothing. And so it's a really critical thing. Well, Paladin, the guys at Paladin, Fig, Alejandra, who runs marketing communications for them, came on to discuss their new product, Quest, which takes kind of all of the components of liquidity management and gives projects a dashboard for managing it, and gives end users a dashboard for managing what they want to take bribes from. So they are trying to reduce the complexity, simplify liquidity management. Their customers, they see their customers as twofold, users and the projects, but they focus more on a B2B play, right? Or P2P play, project to project play. And one of the really cool components of this thing is right now, when you do bribes, you've got to put all this money out there, and you don't get it back. In the case of, and because it gets distributed to everyone that had the bribes, no matter how much you put in. Now with Paladin, they can set their bribe amount on liquidity, and they are able to only pay out what bribes are taken based on a price per bribe. So really cool platform. I was excited about that. And then I had also interviewed, I've got a backlog of interviews, if you can't tell from being sick with COVID. One of the backlogs of of interviews that I had been excited about when I did it 2 weeks ago, whenever it was, is a project called Change, Chainge, and it is a product of a blockchain called Fusion. And so the first thing that's interesting about this is Fusion was the first EVM compatible blockchain. In 2019, they launched Fusion. And it hasn't had a ton of uptake yet. But the interesting thing about this, let me share a screen here. The interesting thing about the Fusion blockchain is one of the interesting things is the founder. Because this guy, and I didn't know it when I was talking to him, but this guy's a friggin' rock star. Like, founded a Fusion blockchain, which is an amazing, and we'll talk about it in a minute, cross-chain capable chain, right? But founded AnySwap, which is the largest cross-chain swapping platform in DeFi. Yeah. Founded Bitsy, founded Change, what I'm going to talk about today, founded and patented this DCRM technology, which is part of Change and part of Fusion, and is the founder of VeChain. So he's got the chops. He completely bootstrapped out of his own pocket Fusion and Change. And Change was built as a way to show off the capabilities of the Fusion blockchain. But by itself, it is, and I don't like to use the term revolutionary, but to me, it is a friggin' revolutionary thing. It's what you and I were just talking about. It addresses the thing that we have always said needs to happen in DeFi, which is seamless cross-chain capability. But when we say cross-chain, people think of bridges or the new swaps that are available. This goes far beyond that, right? So let's say you had USDT on 4 different chains, and you wanted to exchange all of that USDT for USDC, right? Well, in order to do that today, you'd either have to bridge them all and combine them together or do all these separate trades for it. Change is a DEX, essentially, a DEX aggregator somewhat, but nothing like any DEX aggregator you've ever seen, that allows you to instantly say, I want to take all of the USDT in my wallet and I want to exchange it for USDC, and I want you to put it on this chain, or I want you to put it on these 5 chains, or wherever you want it to be. And it will, behind the scenes, take care of every piece of it for you. And it does it not at the smart contract level. It does it at the encryption layer level. So it is fast. He showed me a demo video, and it's in the podcast, of an exchange of 19,000 in USDT for USDC across 4 wallets. And it was done in under 4 minutes across all the chains, everything consolidated, everything taken care of, and back in. It is absolutely amazing. And that's not all. They also have developed, so their first version of this thing is all mobile. It's available. You can use it today. It's not, in beta or anything else. Fully functioning, nice interface. I got some improvement suggestions for him. He's coming down here, by the way, in late September or early October. And so we're going to
get together with him.
Yeah, absolutely.
Hey, can I just jump in real quick? I know you got your routine, but look, if you just scroll down from here on that page, I'm down below it, the yields they have, the description.
Oh yeah.
I mean,
it gets better.
Yeah.
Here's the best part.
Like
you want to talk about yields up to 700% currently, and the tokens never leave your wallet.
Yeah.
Because they enable the yield and the staking at the encryption level, so they don't have to be deposited in a smart contract. So what does that do? That dramatically improves security, right?
Yeah.
That dramatically improves capabilities and speed and performance and everything else. This chain to me is, I have to keep in mind that underlying this project Change, Chainge, is this blockchain fusion. That is what is allowing all of this to happen. And to me, with the name that this guy has, the fact that this chain has not like hit any level, right? I mean, it's at 130 million TVL, all of it on change on that DEX. The fact that it hasn't gained any traction to me is just astounding. Like I'm just flabbergasted, and that's why he changed the platform, was because he wanted Fusion to have more uptake. But it's incredible. I'm totally blown away.
Is FSN the Fusion token for the
Fusion token
chain?
is FSN, and the change token is CNGE. Hold on.
So let me ask a question. So since they don't
CHNG change.
Okay. So they don't, I see the Fusion one's at 18 cents right now. But I guess if they're never leaving your wallet, you're not depositing a smart contract, that would seem like it would eliminate a hell of a lot of smart contract risk.
It eliminates so much risk. Right. Right.
I don't think all of it. I think there must be something else in there that would maybe just general.
No, look, I mean, there are still risks. Don't get me wrong.
Yeah.
It's programmatic. There are risks. I shouldn't have put that piece of candy in my mouth. But the elimination of the exploit capabilities at the smart contract level is amazing. Now, that doesn't change if a DApp moves over to Fusion because it's EVM compatible and they still operate the way they always have. You know, vaults, whatever, then you're going to have to deposit your tokens. But if they develop for what the chain's capable of after they deploy over there, then it's amazing. But here's the thing. If I'm a DApp developer, why is Fusion not the first chain I go to? Because here's the thing. Your users don't have to stop operating the way they always have. MetaMask compatible, the whole bit, right? But now you can suck in the capability of change behind the scenes. Your users never have to leave your DApp, right? They need to swap tokens for tokens. You want to have them depositing in a yield farm that you've set up. One click, they tell you which parts of their wallet they want, and boom, you're into the system. So it's amazing. And I wish I had known Dijon, he calls himself DJ. James says that Fusion had a hack that set it back a few years ago. Okay.
We probably want to figure out what that hack was about.
Yeah, we'll check it out. But, I'm sure they've since then. But I wish I had known all of his background. Yes, Sean. I wish I had known all of his background on the interview. Right. We talked about a couple of things, but we didn't really climb into his full background because I just sent him a message. I said, yo, man, we should have been talking about your background because that immediately brings legitimacy. But if I'm a DApp developer, I'm looking hard at this blockchain because this gives me so much power and capability. The other really cool thing they've done is they have built into the wallet 2 modes, beginner and advanced, right? And they have deployed an encrypted QR code. So the user on the beginner level never has to understand their seed phrase. Right? Yeah. Their password protects it or the 2FA protects it. So they can store that QR code anywhere they want because a hacker cannot redeem it unless you have given them somehow access to your entire phone. Right? So it simplifies onboarding beginner users, and advanced users have the same capabilities, but that they can also store the seed phrase and have full control over it. So I don't know if you can't tell, I think this is a really powerful thing. Now, of course, if it doesn't get any user base, it doesn't matter, but I'm pretty amazed at what's built into this thing. I'm just blown away. And that's not all. I mean, I really want to encourage everyone to go listen to the episode because we climb into a lot of the details, a lot of the functionality and capability there. The APIs are coming out in the next 2 to 3 weeks. Will allow anybody to connect to it and make use of this. I mean, you could even not deploy on Fusion and still make use of the change swap capabilities, right? Because you're reading wallets. So from a DApp perspective, it makes total sense to look at this API and say, well, holy shit, I can get users into my system with 1 click and they never have to like go and swap and move and change and bring things back and forth across. So really powerful, really, really blown away by what's there. And pretty excited to sit down with him in person and hear more about what they're planning. So let's see.
No, that's the Holy Grail. This is what we always want. And I think that you're right. This has significant improvements in a lot of areas that have been the Achilles heel of DeFi 1.0 and 2.0.
Yeah.
If it, like you said, can it build a community? But the fact that it's cross-chain means that it almost doesn't really have to, because it can have community members and all the chains can use it.
Exactly.
And so to me, I think that's revolutionary. Now look, the change token, I'm looking at it now, about 4 cents. There's a total max supply of 800 million, and there's about 110 million out. So there is some, obviously there is going to be some more issuances, but market cap's only 32 mil. Excuse me, the fully diluted market cap, if all those are issued, would be 32 million. Right now, it's only 4 million or 4.5.
Yep.
Yeah, I mean, look, this we should put together. I was thinking about this morning. We should put together a list of like, this one, Canto, all the stuff on the edge that we've been just finding and talking about.
Yeah.
Just somewhere where we could have, where our listeners could access that list if they miss an episode, or at least.
Yeah, those are all. That I do a lot of that on the Mission DeFi website. So every episode's there, and then there are categories. So you can search on cross-chain, you can search on Binance, you can search on whatever, and then you can click the keywords and find other episodes that are in that category.
Yeah, I mean, yeah, okay, but I'm thinking like just, how we were going to do something on we were looking at all the rebase companies last year, and we were building catalogs of that. I mean, I just think we're identifying really cool stuff that we should have just a quick access list for ourselves.
Yeah.
So we can go look, and then all of our core listeners can have it themselves. We just post it in the comments. Or maybe we make it a group activity.
Yeah, that makes sense. I like that. That's good. That's good.
So what's James saying here? Okay.
He says the hack was the wallet that held ERC20 FSN from the mainnet token swap was exploited. He said they've recovered since, but it hurt price and adoption. So that was early stage. I guess it was the tokens they had from the sale or whatever, or that they were distributing. I guess were hacked from. I guess he means from the Ethereum mainnet token swap. So it wasn't necessarily the chain that was hacked. It was the wallet from. I guess he means Ethereum mainnet. So
yeah, look,
but 2019, that would set you back, right? Because that was still early days in a new chain, and it doesn't look great. So I guess I can definitely see why that would have happened.
Yeah, of course. But look, here's on this token, 89% of them are already circulating. So you've got minimal, dilution.
Change or fusion?
This is for fusion.
Okay.
So we got a price of 18.5 cents, a market cap of 13.5 million, max supply of about 82 million tokens.
Yeah.
So you don't have we're not talking about, 4 billion tokens like Stellar, Cardano, those types of guys, or 80 quadrillion. We're talking about a relatively small amount.
Yeah.
That's already out there. So with all that this can do and the built-in security, I mean, it should be on a list of, not a trading list. This is not what I'm talking about trading. To me, these are the ones that you buy just to put away for a year or so and see what happens, because we have management teams executing.
Yeah, and go ahead and stake them.
Yeah, and just let us sit is an option. But Absolutely. This is one that I think if we're trying to figure out who merges in the next big cycle, it's things like this or, Cantos type plays, things that are doing something unique.
Yeah.
But we'll see how this holds up. But great.
Totally agree.
Good interview, dude.
Speaking of my Canto shill, Canto crossed 100 million in TVL today. We're at 101.46 million. Breathing down the neck of my favorite, Cardano. So just a little under 2 million away from passing Cardano on the chain rankings on DeFi Llama. So
wait, what am I? Wait, I don't know where it might have already passed Cardano, dude. It already went by it.
You mean since I got on this show, it passed it?
Cardano's
Come
at
on.
83. I'm in the chain section on DeFi.
Oh, somebody must have pulled a shit ton out of Cardano.
Cardano's down to 83. Canto at 101.
It'll probably come back in for Cardano because Cardano's been sitting above like 103 to 105 for quite a while. I would suspect that whoever pulled it will probably redeposit. So
yeah, they're at 29. Canto's at 27, and Fusion is at 21.
Yeah.
So, you know, these are all great things to pay attention to.
Yep, absolutely. Let's see. So everybody visit missiondefi.com or check out my Twitter feed for links to those episodes I just talked about. Paladin, the guys are doing great work there. They're just building and building and building, and they're partnering with a lot of great projects in space. Definitely worth checking it out, especially if you're into, excuse me, if you're into the bribe space, if you're doing a lot of that. I am not yet because I haven't taken a deep dive in it. But Spirit Swap also has a cool bribes platform. But anyway, Paladin, good stuff on Mission DeFi. Also, the interview with DJ from Change is up. So please take your time and check it out. Let's see. What else
wait.
got,
I want to, since we just spent 20 minutes talking about Mission DeFi, is Mission DeFi paying us for that time?
It is not. Nobody's paying you for your time.
You know,
it is not.
Quest for a sponsor.
Yeah, Mission DeFi would have to have a revenue stream to pay you for your time. So
we'll have to work on that. I'll help dramatically in that front, of course. But the thing is, I was thinking the other day, so we have like core listeners and that seem to be very knowledgeable in this space. I'd be really curious to know, on average, you know, I was going to do this in an anonymous way somehow, just what the average person that's listening is holding in crypto, you know, a value number. Because I think there's a metric here, even if we say we only had 10 people listening to this show, but if it was all 10 people that were sitting on $1 billion in crypto or managing $1 billion in crypto each, then it's like 10 billion in cryptos watching the show versus 10 people watching the show. You know what I mean?
Yeah.
I'd love to figure out a way to run a metric like that without, you know, compromising anything, of course, and not.
Well, we could do an anonymous poll in Discord in the Discord
Okay.
channel.
Yeah, that'd be cool because I'd like to do that, and then we can do like an extrapolation from that to number of listeners in the different streams, you know, or in timing. Is it live or is it after? And make some suppositions for potential, you know, sponsors, I guess.
Yeah. No, I think that's a great idea. I like that. We'll put one up.
Okay,
that's
cool.
A good idea.
Thanks.
Sam CZ's son put up this great idea. I've had a lot of difficulty. It's a great concept. He's put up a database where people can tag Ethereum wallets, right? So you can find a wallet, you can tag it. Like I put in Sifu's today just for shits and giggles. But I actually haven't had a lot of luck with the actual search mechanism. So I don't know if it's currently down, you know, or what. I was able to search on Sifu's wallet address and then label it, but it doesn't show it updated. I think they have to approve the addresses, but like I can't, when I search, I don't find anything. So I love the concept of a crowd built. So this is what Nansen does, right? Nansen takes this massive database they've built of wallets and the activity of those wallets and presents them as charts and tables so people can make investment decisions based on what venture capitalists are doing or whales are doing or whatever, or what the trends are on a specific NFT project, whatever. So basically he's competing in a crowdsourced way with Nansen and Masari by making it so everyone can kind of come in here and label wallets and find data, etc. Great concept. I just don't see. I don't see.
It doesn't work.
I can't get actual data out of the engine. I can search on a wallet address, but that doesn't like make it a useful thing for people to pull data from. So hopefully this will change, but it's tags.eth.samczson.com. So, and look, Sam does a ton of great work in the space. He's one of the one that's stopped some exploits and hacks that were pending on some chains, including Sushi. So anyway,
so can I ask a question, Brad? Is this where people are like tagging their wallet with their name?
well, you could tag your own wallet with your name. You probably wouldn't want to.
Yeah, that's what I'm asking. Why?
Well, so the idea is if you go to Etherscan, you can see a lot of wallets in Etherscan and who owns them, whether it's Binance, whether it's A16Z, whatever, right? So the idea, I'm assuming this is why he built it, and maybe also for him, it's to catch scammers, exploiter wallets, hacker wallets, etc., because he's also involved heavily on the security side of things. But the idea would be, from my perspective, is that it could be an open source version of what Nansen does, which is allows you to see what different people are investing in, what projects the wallets are putting money into. And, or if you find a wallet on a project, invested in a project, what is that wallet? Who is investing? Are they credible? And you could come back here and say, oh yeah, that wallet belongs to, you know, whoever, A16Z, whatever, and make a decision based on that for your investments. I'm not sure that's the motivation, but the concept is a cool concept.
Yeah, I like the idea.
See, he says if you search compound, and it doesn't work for me. So I think the database has got some issues.
Yeah,
there it goes. It worked. There we go. So this shows you all the wallets tied to the protocol of Compound, right? So price oracle, migrations, specific tokens, the time lock, those you can see. Maybe that's all he meant for this to be, is to protocol wallet integration. I don't know, but the concept is great. I love the idea of everybody in DeFi contributing to this.
So he includes the time lock information as well?
He tells you which wallet is responsible for the time lock.
Oh, cool.
Yeah, he doesn't give you any other info besides that. I mean, you can go to Etherscan and see the current transactions. So
yeah.
Anyway.
Well, I mean, that's just, you know, it's another tool.
Yeah,
it's
absolutely.
Another puzzle. It's another puzzle in the sort of another piece of that puzzle to, you know, hopefully doing a little bit better than worse. You know,
yeah,
is all that
exactly.
we're going for here. So this is cool.
Yeah, so it's users, applications, protocols. Yeah, I think he means for it to be a lot of different things. So we'll see how it comes out, but I love the idea. And I'll put that in the show notes. You posted this up. Oh, Zogi Labs.
You know, I talked about this last week, and I felt like I needed to share it because I never mentioned it. But there was it's another game. There's a beta. If anybody's interested in you know, learning anything about it, I have a referral code somewhere. I'll throw it up on Twitter later. But you could go in and mess around and play. And it was recommended to me by some friends that came out of the Doki Doki stuff. So
okay.
So they're all in there. So that means that it's interesting. Of course, I never quite can get to everything, but I encourage everybody to check this out. And let me just get, where would the referral code be? All right, hold on. And I will just pull that out right now. And I put it, well, I'll find it and put it in notes later rather than grapple around here live, looking like I'm digging through a toolbox, banging stuff around. Put up that Goldman Sachs article, please.
I will do that.
Por favor. Well, that's interesting. This is worth checking out. It wasn't in New York Times, but it was you know, virtual dating. I guess people are now meeting in the metaverse on dates versus you know, going to the bar.
You don't have to wear a condom.
And everybody's hot. The dream come true, guys.
Yeah.
But it's just, I would recommend, I don't want to go through the highlights, but it brings up some interesting, like, sort of comparison points and, you know, virtual phantom touch and these other concepts that I thought were pretty intriguing because, you know, really, you're going to have to get to those sensory things too for metaverses to really work. And that you're going to have some kind of a touch concept, I would think, a feel of some sort. For it to go forward. But I encourage everybody to read it. It's called Phantom Touch and the Real Pleasures of Virtual Dating on New York Times. But let's go to the more important stuff, the economic data.
Okay.
Okay, we'll go here first. This is really interesting. I don't know. I saw it, somebody sent it to me in a channel, but then I went to their website, QCP Capital, and I only see 4 issues. So I don't know if this is leaked or if they stopped updating or if it's one person or what's going on, but it's really interesting. We'll put the link up in the notes, but it's got a whole string of discussion about the fork and the merge, and then ties it into the events timeline that I've mentioned about CPI, FOMC, and merge and China. He pulls all those pieces together, but scroll down a little bit.
Okay.
Please. And so we get this chart here, which is talking about year-to-date performance in, well, BTC and ETH, but what is it? The S&P and what is the index above? NASDAQ and
NASDAQ.
S&P. Okay. And so it shows how they're off for year-to-date. S&P off 15% roughly. NASDAQ off 25% roughly. ETH at, well, BTC off almost 60 and ETH almost 60. So he's making a consensus about ETH potentially being able to make a move here. But scroll down a little bit further, because he's saying, we're at 120% trough to peak rally. It's a couple of days old. But this talks about the burn. And I thought this was interesting data here, because I haven't seen this anywhere before like this. But the average daily ETH burn, how much it's plummeted since EIP 1559, not increased.
Wow.
And that's what surprised me. I want everybody to kind of like think about this and interpret what that means. I don't quite know myself.
Well, I did see a piece. You remember that piece I talked about a couple of a week or two ago, where the guy was pretty negative about the merge equaling anything substantial in price, et cetera.
That's right.
Yeah. I think he talked about the reason that 1559 wasn't increasing the burn of Ethereum, but now I'm drawing a total friggin' blank on.
I was wondering if it was just because volume had gone down, or I mean I don't know. I'm just speculating, but
I'm sure it's partially because of the volume dropping. That makes sense. That totally makes sense.
So, but I thought that was intriguing, because I was in my mindset, just somewhere in the back of my mind, I'm seeing a chart of just more ETH burning every day. And
right.
So, this was important to me to like, oh, wait, I got that part wrong. But how you interpret it, of course, that is, all the important part here. But scroll down a little bit more. There was something else down here that I thought was cool.
Here it is. Total usage has declined. The proportion of ETH usage across segments has remained surprisingly consistent. 50% from NFTs, 40% from DeFi, and 10% from everything else.
Yeah. So you could see that's another thing. So the two biggest sectors are kind of in a drag right now.
Yeah.
90% of it is in a drag right now. So
okay.
Reminds me, I saw some stuff on those Chainbinder NFTs regarding the ETH that's backing them, Brad. I don't know if you still have them, but supposedly you have to burn them and move that back to ETH1 to get the proof of work tokens. I saw Ray talking about that. Just so you know, it just reminded me. But look into that for yourself. So I thought that was kind of interesting. And then, talking a little about it, DeFi yields rock bottom, PFP project hype similarly flatlining, and then, NFTs extending away from purely PFP type stuff, which I see happening. We see the kind of governance token NFTs that are being used for a whole variety of kind of almost, smart contracty applications that, are far more complex than just a picture of a pixelated thing, or a profile pic. So we know that's coming, but still, I didn't realize how much in the doldrums that was. And you look at like OpenSea volume is down like 95% or something. But so scroll down, there's some more stuff that's interesting.
Okay.
And then this is the flippening that I thought was I was teasing out on Twitter today. Of course, Sean came back with the Sol flippening ETH comment. But it's more that the yields you get at the bank are now higher than what you get on Aave and CeFi counterparts for stables equivalent, let's say. So that was kind of interesting too, to think through. What does that mean? I mean, it's easy to summarize what it means, but obviously there's different conclusions to be drawn there, because you can see at the left side of the chart, Brad, if you just scroll right back up for a second, please. Yeah, you see all those yields over there.
Yep.
and how, FTX and Aave, how high they were in those cycles. And then, that little bump I remember, and then everything's kind of normalized. We see it when we look at yield farms. There's nothing,
Sure.
There's no, that's why, Sean, when we saw that 700% on change, I was like, oh, wow. Okay, let's see what's going on here. But that, you look at something like that with Fusion, you get in long, that can make sense. Okay, you get those yields, but it doesn't ever last forever. And
Right.
that's the thing I think people miss. It's like everybody thinks everything's, people who come in the last 2 years or the last year and a half think everything goes up. Well, they don't anymore. But when they came in, they thought everything went up forever. And with those yields, where we know those were, community growth, user adoption incentives to get people
Right.
into the platform, just like venture money was for the .com companies to fund marketing ads. It's, what you do, and then it's going to normalize. But now, obviously with interest rates going up, bank yields are starting to pass those.
Yep.
Which is
well, and that's the more, I mean, look, there are still good yields, stable yields on some of the projects and chains right now that are much higher than bank
Right.
yields are going to be. These more conservative plays are definitely going to, and you look, somebody like FTX is not going to try to pull get themselves in trouble. Yeah, exactly. So they're probably leaning towards conservative as well. But Aave's always going to be low. I mean, that's and that impacts a lot of projects in the space.
And also the difference between Aave and the traditional bank, you might be sacrificing a little bit on you might be paying a little or not getting as much yield, but you can also borrow against it.
Yeah.
And redeploy that for more yield. So
absolutely.
Don't forget about that. And I just thought of that while we were just talking, but that kind of is the difference between the bank.
This is a great piece though, man. I love the data they're pulling in on here.
And then having cycles, I wanted Sean to really see this because I wanted his input, sometime in the future, but just looking at that and going forward is the other thing we have to factor in for what is that, May 24, I think.
Yeah.
Yeah. And does the assumption still hold?
Correct.
And then I think when you go next, doesn't he get,
I think there's a lot of people now saying, the halving is washed up, but
yeah. But then I think he gets into some stuff. I didn't really look at this deep, but there was something in, I saw some, it looks like he's talking about this Wyckoff stuff again, fifth wave lower thing. Which is not me. I'm not a technical chart guy.
No.
But I know that there's different strategies that tend to play out in, price behavior. We got a little summary of BTC and ETH seasonality. So you can see the months of the year when it does best and doesn't, which is good to have in a report too.
Absolutely. But like what you said, look at September's.
Yeah. It's the worst.
It's the absolute worst. Wow.
And then look at like October, but look at what was last year's October? 29.62 in ETH and 27.36 in BTC.
Yeah.
I remember that month. That was a fun month.
Yes, it was.
That was when we started the show too.
Yeah, that's right. That's right.
What
did you call October? I forgot what you called it.
Pumptober.
Pumptober. That was it.
Yeah.
Pumptober.
There was a couple other ones I kind of came up with too, but that was the main one, Pumptober.
Yeah.
But look at that, look at August 2017 on BTC, 73%. I'm just thinking, I was looking at that year a lot.
Yeah.
October, 46%, November, 46%, December, 27.5%. Then down 25, up 14, down 36, up 35. These are like huge swings.
Gigantic swings.
So it's important, to always, because everybody else is looking at this chart, guys and gals, or people, sorry. And, they're trading off of this information.
Yeah.
So,
absolutely.
Use it to your advantage as well, whether you're going contrarian or going with. So
2018 October for both. All red. But everything else October is good.
Yeah, 2018, remember that was setting up into the Thanksgiving Day massacre or whatever?
Yeah.
Somewhere U.S. time, somewhere around the 23rd or whatever of November. when that was when it went from like 7.5 to 3, I think, overnight.
Yep.
Yeah, that was a kick in the
That was fun.
gut. And a little lower multiple times. Yeah, that was brutal. And then
upcoming event risk.
Yeah, this is what I was talking about, events. I like this because look where he doesn't have the Mt. Gox stuff in, and I don't know what the NFP was on the second. I didn't pay attention, but it lays out what's coming. So, you see CPI on the 13th, that's inflation, ETH merge. I think that's now 13 to 15 from Vitalik. FOMC, that's interest rate data, 50 or 75 bips. Then we get inflation in October, and then the China Party Congress on the 16th. And then, stuff on oil and gas type things.
Winter.
And then, elections and more CPI.
Yeah. It looks like the next few months are going to be a lot of fucking fun.
Yeah. Well, unless, if CPI is going down, if it keeps holding going down, that's going to be optimistic.
True.
U.S. midterm elections, 4-year cycle on the monthly returns. I'm not sure what.
Me either. He'll explain.
Yeah. And then look, this is the thing too that I thought was cool. If you go below this, he puts his trades in, his open trades, and he makes his recommended trades here. Now this, he's doing some hardcore goods. It's pretty sophisticated stuff he's doing here, from what I can see. And so he's making calls for people, picks, suggestions, whatever. So, and then he runs his realized and unrealized losses and profits here. So.
BTC. All right.
So it's worth looking at.
Definitely. I love this. We'll put the link to it in the show notes. That's great, man.
Yeah. And I tagged him. It's QCP Capital.
Okay.
So I tagged him in one of the posts. Hopefully they'll jump on and, we'll see the next stuff. But just, I thought it was high quality analysis that, you don't really find in one place.
Yeah,
so.
Absolutely.
So let's put that link in the comments, or at least when you put the show notes out or something.
Yeah, it'll be in the show notes. It'll be in the show notes. Joe, I got nothing else today, man.
The last thing I had real quick was that Goldman Sachs thing.
Oh, I don't see a link to Goldman Sachs.
Sure. It's not in the
no.
In the Telegram channel? Damn,
No.
Sorry, bro. Hold on. All right, here it comes. Oh, I know where it is. Oh, it's in my browser. All right.
You want to share your screen since you have it open?
Yeah, I'm just going to switch over to that one. I will do that.
I'll stop mine. You're up, sir.
Okay. Now I have to do, because I'm running two browsers here, so hold on one second. Let me see how I do this. Share screen. Share. Chrome tab. No, we're not in Chrome. Let's do that. Why won't it let me share the screen? Window?
I don't know, bud.
I'm trying, guys. Hold on. Here we go. Now we got it. Okay. Now that's not the right one, though. I'm going to go to it here. So,
Sean said the Rational Root interview on what Bitcoin did from a couple of days ago is a great listen on the Happening. Cool. We'll check it out. That's great.
All right. You know what the thing is? I've got the link over in Firefox, so I'm going to send it to you.
Okay.
I can't seem to get both browsers going at the same time. So let's see where we are here. Oh, wait, I'm sharing this whole, when I'm working through here, this is all sharing, right? Okay. Here we go, almost. Bear with me.
Okay.
Incoming. There you go. Just got the Air Force One in the picture.
Oh, okay. Hold on. Yeah, dead air. Okay. There we go.
There we go.
Let me share screen again.
Thank you, sir. Yeah, I run the tabs over articles in Firefox and StreamYard in Chrome. So,
all right.
And I only got one monitor going. So,
soft landing. All right.
Yeah. So scroll down. There's a good chart down here. Right here, this chart. So look, this is what it takes to get this soft landing in their mind. So the very first part is the first set of bars is GDP growth, and they're saying that that's already like below potential GDP. It's not contracting; it's just not growing as fast as it could. That starts slowing down things like hiring and in job growth, which is what also has to happen, unfortunately. The second piece is that jobs workers gap. So, you have to constrict it enough so employers aren't hiring, so that there are less jobs out there, so less spending. Now, I know this sounds harsh. I'm just talking about it from a top-down macro perspective. I understand there's individual pain in what I'm just summarizing, as in, hey, whatever. But I understand that hurts people. So I'm just talking.
Sure.
I'm not, casting aspersions. But that slows it down so everybody has, I guess, less money to spend. And then the third piece is, bringing down core inflation. And they see, that one would be from where it's at now at 4.5, I guess, to 2.5. The job worker gap it looks like it's about 1.75 or 2 down to about 0.75. And then obviously the GDP growth. So if you scroll down a little bit further for me, the growth adjustment is furthest along. The slowdown initially.
There we go.
Came on reduced fiscal support and much higher food and energy prices. So that's what created that slowdown in GDP growth, was it GDP or GNP, one or the other. And now the rise in mortgage rates has dealt the housing market a blow. So now the labor market's starting to adjust. Labor force participation rate in August picked up to offset declines, while payroll growth is starting to slow and job openings have moved lower. So there's also encouraging news on inflation. Sharply lower commodity prices, a stronger dollar, and large improvements in supply chain disruptions all suggest that goods price inflation will continue to abate, he said. Services inflation will take longer to moderate, but even there, a recent deceleration in the asking price for rents should show up in the next several months. He said the recent decline in risk assets has improved the near-term risk outlet, although a large rally could run into the same constraints as early rebounds. For the most part, our strategists thus still expect markets to remain range-bound. So they're still calling a 33% chance of an recession next year, but a mild one. So to me, again, I find, it's Shizzy. Think of it as a super tanker. And, when you want to make a turn or do something, you got to start that turn like 25 miles before the turn. That's why they're always too early or too late.
Right.
Because they're trying to account for that big lag. Because it's like we're talking about now with all these, all of these interest rate hikes have started, are meant to address that lag, slowing it down so you can start getting tighter in your maneuvering. Okay, what do we got here? Low income transfer, those are spending almost entirely on subsidies in contracting these jobs.
He's saying basically the low income jobs are the first to go, and how much effect will this have on that category of jobs, right? I
don't know. To me, I don't know. I don't know if they're the first jobs to go. I mean, I'm going to take out bloated upper management myself.
You would think at least middle management would be the first cuts.
Yeah. And also just from a cost standpoint, these types of low income transitory jobs usually don't have benefits. A lot of times they're worked by people that have no other choice, illegals or ex-felons and people like that don't really have any other options. Right. So you kind of have a captive audience or a captive laborer once they're trained up. So I don't know if they go as fast, but I think I get your point. And I do understand that they spend all their money on food and housing. Yeah. And debt servicing. So they're in a trap. I think that they're going to still have opportunities. I think those jobs stay myself. I think it's going to be the other ones that are packed in benefits and things like that. They're going to get taken out first. But that's just, I'm no expert. I'm just making an assumption. But I think it's, and so how much demand destruction? Right. Yeah. Right, Sean. They're not refined at all. It's like, shooting a shotgun at a barn door. How much demand destruction to reduce inflation is there in reducing? I don't know if that, well, the ones that you were talking about, the low income workers, I don't think that takes out a lot of demand reduction. But I think when people that, have big stock portfolios and incomes, I mean, they definitely have seen the 25% S&P reduction.
Right.
It's people that aren't in crypto. I mean, that's really kind of all they're talking about. I mean, they're feeling it. So, that cascades. Now, again, this is, rich people problems, I guess, or whatever we'd say.
Yeah.
But, they're paying,
problem.
they're paying, tuitions and, 3 Mercedes and giant mortgages. I mean, they start downsizing too. So, but yeah, of course, they're going to eat. They're dropping down the shelves on the back of the bar from top shelf, from the $50 scotch to the $30 scotch. But, it's not the same. But that demand, that's a lot of money that flows into the economy. So I kind of think that's where a lot of it comes from, because we're talking about food and we're talking about energy. And yeah. I'm not saying you're fine, buddy. I think you have a lot of other problems.
Well, he's not saying, he's just saying that in category that's who's fine.
Yeah.
He's not saying necessarily that's him, but
no. I'm not saying that either. I'm just saying that I think non-management skilled laborer.
Yeah.
You're actually in a better spot. Yeah, probably there.
Of course. Yeah.
I thought I was looking at low paying labor, the ones that Niblets was talking about, that category.
Right.
Low income laborer. Yeah, I mean, look, there's problems everywhere. Yeah. And I just always try to adjust my burn accordingly. And so, I mean, but people know me as, I don't know, I just don't spend a bunch of money anymore, like I did when I was younger.
Sure.
So, when that kind of people start spending more, when people start spending less and more importantly on important things, to me, that's better, because I think we have too much consumerism in society.
Yeah.
But again, low income laborers, and they're the ones that bear the brunt of the problem everywhere. I mean, I'm going to say probably not the top education. You're probably talking about people of color. You're probably talking about everybody that gets marginalized constantly.
Yep.
So, they got more problems to deal with than this every single day.
Well, and if you took that $22 an hour at your local McDonald's, you better sign up for that management program, because, that's,
the robots are coming too. So.
Yeah, wow, that's true. That's for damn sure.
For those jobs.
Yep.
But, it's just, it's hard to say this without sounding like a dick, but it's,
don't worry, we all know you're a dick. It's okay.
No, but I have compassion for people. I try to have.
Of course you do. I'm just playing with you.
I try to recognize that other people have it a lot harder, for a variety of reasons. But the number one thing I always told my daughter from day one is, I said, it's education. It's education. It's education. I mean, I stayed home a lot after she was born. Now, of course, I was in my 40s, so it was easier. But just to push that for her and provide that, so build those networks for her, or systems, so that she knew that she needed it. And you need it.
Right.
If you don't have it, you can still go get it. It's not the end of the world. Or you can do like Shizzy said, skilled laborer jobs. Those pay like tremendous amounts of money, and and it's you can do very well at that. But I think the key thing is that you have to really try to instill that in your kids at that point.
Yep.
The next generation, because look at like a lot of immigrant families. Look at, I'm going to say the Asian families. Okay, I mean, and this is a compliment. It's not, I'm not trying to single them out or anything, but they are on those kids. They are on them to study and learn. And I don't know, I don't really want to live in that type of situation myself, but they push them. And I think that anybody who's in kind of a bad shape right now and you have kids, just think about that. How do you train them up so that they don't have it as bad as you, or have it better? And they'll take care of you too at that point. So it's your strategic plan. So I kind of really push that front. And it's not like if you don't have it, I think that there's something wrong, because I know plenty of people that are self-taught and have no college degrees that have much more money than I do.
Yep.
So if that's your benchmark, you don't need it. But if you want to be able to see from top down, high level perspective on things, it helps to know what's happened in the past in history.
That's right.
It helps to know how people thought about things and what happened and how government systems change over time and what happens. How does that happen? You know, and think, just add that to your mix. And that helps you. It makes you a little more sane, a little more, feel a little bit more like you understand what's going on in these transitions. Right. You're not always the one who gets screwed.
Yeah.
So, you know, but the world is a complex, diverse place, and everybody's got different perspectives and different things. And I try to respect all of it, you know, as long as it doesn't infringe on the rights of others in a, you know, horrible way. So
totally.
So anyhow, we'll see what happens, I guess. Yeah. There's my little preaching for the day.
Good stuff today, Joe.
Thanks, man.
I appreciate you doing the work. I was busy last minute editing, so thank you. Oh
no, dude, but you pull all these, most of these really cool, innovative edge opportunities you're finding. You know, people are messaging you on Twitter. And also, I do have to say to all the Twitter people, I apologize for trashing it for so long. I actually kind of enjoy it.
Twitter is freaking awesome, dude. I get so much of my network, so much alpha, I learn from Twitter every friggin' day. I mean, the problem is I get so much value from it that I spend too much friggin' time in it. Right.
Yeah. I see that. I mean, not too much. I see you spend a lot of time in it. So.
I do. And it helps. I mean, obviously it boosts my signal, but at the same time, because it's so valuable, it's something I'm constantly trying to find more information for us, for the shows, whatever. But at the same time, it also is a huge time suck, and it's a dopamine hit. So,
hey, can I ask a question though, real quick on Twitter?
Shizzy says, "Thank you both for the show. Always enjoy it. Thank you for listening, Shizzy.
Yeah,
thanks for
buddy.
participating and adding to it too."
Yeah, we love that. I got a quick question. If I tweet from, or if I share from LinkedIn, and you know, you can do LinkedIn and Twitter at the same time, and then the tweet has the link from LinkedIn. Do people click on that, or is it like a thing? What the fuck? I'm not going to go there.
Well, I mean, you know, LinkedIn is pretty mocked on Twitter and crypto Twitter. So most people don't, but it can't hurt. Now, the thing it does hurt is the Twitter algorithm likes tweets without external links. Okay. So, and I break this rule all the time, and I shouldn't. So what I should be doing is, like, when I post an episode description, I should post the episode description and then reply with the link, because that'll boost your first tweet in the algorithm better than having a link in it. Anything with a link in it, Twitter
because it takes you off platform. So of course they're going to send that
exactly
holding pattern. Okay, so yeah, because sometimes I get a lot of, like, I shared an EU crypto regulation report today, but you know, I couldn't get it out of the other person's post. So and I forwarded it, but you know, it was just easiest. But then I'm like, are people on Twitter, would they rather see it in my post, the report?
Yeah,
they would. Okay, cool. I'm just trying to save a step.
Definitely.
Okay.
Yep, absolutely.
Cool, man.
All right. Thank you, everybody, for listening and watching. Thank you, Shizzy, Niblets, Sean, for participating and giving us content, and James, and thoughts and information that we didn't have coming in. You guys are a hugely valuable part of what we do every day, and we appreciate you being here and adding to our knowledge, because I definitely don't know as much as many of you do. So appreciate that.
Yeah.
Thanks for listening and watching. If you have any thoughts or feedback or comments, B05 Crypto on Twitter or Telegram, B05 Crypto #2143 on Discord. Would appreciate it if you could take 2 minutes, head over to Apple Podcasts, Spotify, and rate or review the podcast. Subscribe over there. The more you do that, the higher we go in the rankings, which means we get more listeners, which means we can keep this thing going. So would really appreciate you doing that there. Over on YouTube, please hit subscribe and click the little bell so you get notified when new episodes come out. Thank you as always for listening. We appreciate and love you guys. Joe, have a great afternoon.
Hey, you too, buddy. And thanks, everyone. Look forward to chatting tomorrow.
All right. See y'all.